Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. You know the drill. We've been here for 21 years providing the best technical analysis on the planet and trading systems on the planet. Anyway, happy holidays everyone. So tonight, it is currently Monday, December 16th in the evening, and this is my technical analysis review of the markets. This is our back-end recorder for our website subscription service, and I'm going to get that started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, December 16th newsletter. Happy holidays everyone. Christmas is now only 8 days away. Kids are excited. My kids anyway. Anyway, tonight's newsletter, as you can see, divided into 6 major sections. Same general theme as I always keep. After doing the discussion on the market, we're going to move into some admin comments. We're going to talk about some of our trading systems. We still have this open trade on the SPY breakout system. New trailing stops today. It's a very profitable trade. Also going to discuss the KISS systems just briefly. Then I'll move down to the general market analysis, do a top-down approach, look at things there. Again, we're in holiday mode, as you know. We'll look at a few indicators like the VIX. We'll look at the bond market and the 10-year treasury yield. We'll look at a few major sectors. We'll look at the dollar, Bitcoin, and cryptocurrencies. By the way, Bitcoin hit 108,000 a day. So party continues there. Then we'll look at general commodities, precious metals, gold and silver, and mining stocks. And finally, we'll review some trade ideas. I added just a few new setups this evening. All right. And again, market continues going up, though this is a narrow breadth market. The breadth has been quite negative, guys, primarily because lately over the last week, 2 weeks, this rally has been primarily led by the big cap tech stocks. Okay, all you got to do is look at some breadth indicators like the NYMO or the RSP, that's the S&P equal weighted, or you can look at the 20 or so market sectors. The majority of the sectors have been downtrending while, big cap tech and some of the major indexes have been going up. So anyway, is what it is. As far as news items this week, again, we're in holiday mode. The big one is the FOMC on Wednesday. There's also PCE inflation data on Friday. Next. So just to give you an example, guys, the first image here, item number 2, here's the NYMO. That's the NYSE McClellan Oscillator. Okay, and you can see over the last week and a half, it has basically done a nosedive here, while the S&P has continued to rally. And so you can see a definite divergence here. Again, that's your negative breadth. And image number 3, here's the S&P versus the RSP, that's the equal weighted, and you can see while the S&P has been holding up here well, you can see the equal weighted just has been trending down very strongly the last couple weeks. Again, why is that? It's because it's these large cap tech stocks that are also in the S&P, and the average stock in many sectors have been downtrending. Okay. Next, and we'll get back to the general market. Let's talk about some of our systems. So image number 4, here is the SPY mean reversion systems that have occurred this year. Again, we still have this open SPY breakout. It first took a long entry on November 7th, 39 days ago, and the second entry was on November 15th. And here's the stops. The current stop on the first position is 600.5. That trade went long at 591, so well above entry, about 9 points above entry. So it's a guaranteed profit no matter what happens, and the second entry is over the entry as well. So congrats if you took that trade. It's been a nice trade. Again, as I already discussed, mean reversion systems like market volatility, and this year hasn't been very volatile, so there hasn't been a lot of mean reversion trades this year, but still very profitable if you look. If you just simply took all these trades, easily paid for your membership many times over. Now, in a volatile year, we might see as many as close to 100 trades on the mean reversion. Okay. And next, image number 5. So here's an image taken from the systems section, the KISS systems. This is the high performance version section. And again, hella gains here, especially on these big cap tech. We have 2 Tesla systems. 78 minute is up 74.5%. The 130 minutes up 71.8%. Those systems went long on October 24th, as you can see. Unreal gains here, but really nice gains. GBTC, IBIT, those are crypto. They're up 60%, 57% respectively. QLD, that's leveraged NASDAQ, up 30.7%. That went long on September 11th. I mean, really nice gains here. Congrats to those of you who've been following this. And I know we got a lot of recent new subscribers for the Black Friday, Cyber Monday, the special we did on Thanksgiving. Okay. Again, this section is going to continue to evolve and improve over time. So excited about 2020, and I hope you guys are. All right, moving back to the general market. So item number 6 shows the index sector table, what transpired today. Again, you can see major indexes were up nicely. The Dow has really been lagging. The Dow has now closed 8 consecutive down days in a row. I'm kind of wondering if we're going to see a mean reversion bounce soon, because 8 days consecutively down, getting a bit stretched. Doesn't mean you can't have 9 or 10 days, but eventually we're going to see at least a bounce. S&P up 0.4%, NASDAQ up 1.25%. NASDAQ 100, which is where you have the really big cap tech, up about 1.5%. And the Russell was up about 0.6% today. And if you look at the market sectors, like I said here, you can see slightly more sectors were down today. Kind of shows you a little bit of that negative breath. Energy really took it on the chin. XLE's really been selling off lately. Didn't hold that support I was showing. Oil services, transports down. All these other sectors down. Where do you see the gains? Of course, in the technology. Semiconductors up 2%. By the way, semiconductors trying to break out of a coil. So definitely an area to watch. And currencies, US dollar down just a tad today, 0.17%. Cryptocurrencies, like I said, Bitcoin rallying again, hit 10, almost 108,000 today, a little bit off that highs. Commodities, well, mostly to the downside here. The index, DBC down 0.5%, crude oil down 0.7%, natural gas down 2%, copper pretty flat, uranium down. Some mixed bag here in some of the ag area. Agriculture itself, DBA was up. That's been on a really nice uptrend for a while. And the precious metal area, gold and silver up slightly, while GDX, the miners, down. And the bond market, slight pullbacks in the 10-year, 30-year Treasury yields. That area's had a pretty big rally, as you know, out of that 5th wave low that I've been showing, but a little pullback today. And item number 7 shows the economic news calendar. Again, the big one I'd say this week is the FOMC and possibly the PCE inflation data on Friday. There's a bunch of other things here to monitor, of course, though. Okay, let's go and jump to these charts, get through this quickly as we can. So, like I said, what's been leading the market lately, the last couple weeks, are the big cap tech. So, last week I presented AVGO, that's Broadcom. I said this looked like it was ready to break out. Yes, earnings obviously was the catalyst, but I know some of you bought this before earnings. And look at these moves. Huge move on Friday last week. Big follow through today. Look at that volume. Congrats, anyone, if you took that trade. Next, chart 9. Here's Tesla. Like I said, Tesla up and away. Elon's fortune is now over $400 billion. Honestly, Elon's probably on track to be the first trillionaire. Pretty crazy. You can see the MACD, that MACD divergence. There's no MACD divergence here. And of course, the Tesla system on our KISS system is killing it. Hopefully some of you are in that. Here's the weekly version of Tesla. New all-time highs. I'm sure Elon's very happy. And you can see well before this happened, we illustrated this 5-wave bullish coil pattern. And this is how you draw a 5-wave pattern. A, B, C, D, E. You can see E's a higher low in the coil, and it was just moonshot up from there. Looking at others, here's Google. Google, broke out of this big coil, and last week they had the news on that their AI chip, or not their AI chip, their quantum computer chip, and markets like that, obviously. Chart 12, here's Amazon, up and away. Like I said, no MACD divergence. Very slight 5 RSI divergence, but it's really just following this 9 EMA. We illustrated as a long idea back here in late November off this trend line break and this little horizontal trend line there. Chart number 13, here's Meta. It also broke out of that coil-like pattern a couple weeks ago. Still doing well. And chart number 14, Meta, obviously doing well. Broken out of that expanded wedge. Still holding that 9 EMA there. Now, one that is lagging a bit is NVIDIA. Okay, remember, now NVIDIA has been playing out as I stated. It was in this tight coil or channel. It broke the channel. It found initial support in this demand zone. I said to watch for it to find resistance on the back test of that channel line. Well, that's exactly what happened. It was a very good short there. And it's pulled back. It's still kind of in this demand zone. But guys, when you test a demand zone like this so many times, it gets weak. Honestly, it may be on track to go to this bigger demand zone down there. And that would be, the 200-day moving average would catch up to that. That would likely be your better buy if that occurs. And chart number 16, here's NVDS. That's the 1.5 inverse ETF short on NVIDIA. I've been showing this pattern. It's got this nice little base going. You can see a little poke above the trend line today. Again, if you're long here, maybe a tight stop could go around that 27.33 where you see the bunched up moving averages there. Okay, so that does it for those. Let's take a look at the major indexes. So this chart shows you the 5 key major indexes. Again, like I said, up, and away for the big cap tech here. NASDAQ 100. The Dow has been down 8 days in a row. It's really been taken to the woodshed. Again, like I said, this market's been concentrated in that big cap tech. And the Russell finally bouncing back a little bit today. Still has a little work to do. Next, let's look at the individual indexes. Here's the Dow. Again, down 8 consecutive days in a row. Notice you got the 50-day moving average here. You have a demand zone down here. So if it gets down into here, especially if we have another down day or two, around this 50-day moving average, this channel line, that could be a low-risk trade, at least for a mean reversion bounce. Okay, so something to watch. Now, if you want a leveraged play, UDow, that's the 3X Dow. Okay, so one to watch. I would look at an intraday chart, guys, like a 30-minute, 60-minute, watch for some divergence, watch for a trigger of some sort. Next, moving on to the S&P 500 chart. So chart number 20, here's the S&P 500 KISS, high-performance KISS system. No changes here. Smart trailing stop is still 59.50. Next, chart number 21, here's the 4 time frames. Again, not a lot to say here, guys. Again, first off, ATR is your support in all these time frames, essentially. And we'll see where things go from here. Next, chart number 22, here's the weekly view of the S&P, just showing we've been in this uptrend channel for quite a long time. We'll see how the new year begins, if we finally get some sort of decent pullback in the new year. Chart number 23, here's another weekly version. And again, I talked about this last week. This is one version. There's many versions, guys. But one thing that could lead to a decent correction in, say, sometime in 2025 would be if this is a wave 5 of 3 that once complete, we get a pretty healthy wave 4 pullback. And look, even if it just pulled back to the 23.6 fib, that's around 5,500. That's a good 600 points. Or the 38% fib would be a good 900 points. And that's normal for a fourth wave on this respective time frame. Okay, I would expect that to take a few months at least. And then you rally up again to a new all-time high, so it's something to watch. Another thing I'd monitor on this weekly chart, notice you got a very obvious coil pattern setting up on the RSI. I always tell you guys, draw trend lines in the RSI when you can. They can give you nice triggers. All right, moving down, here's the daily charts. Again, S&P's in this obvious channel. Here's a demand zone below. If we get a little quick pullback, you have the 20-day moving average below. Again, this could easily pop to a new high, which I expect it to. But or do we get a pullback first in the demand zone? We'll see. Chart number 25, here's the other daily chart again. Last week I talked about that wave 4 pullback, which may have completed and then get another 5 into the Christmas time frame. You can see the uptrend channel line. Chart number 26. Here's that chart I showed last Monday. we were looking for that pullback in that wave 4, and really we got that, as you can see in this wedge. So if that completed the wave 4, then you could get another move up in a wave 5. The point is, this is an ending diagonal pattern, and so once that completes, then you get your really healthy pullback. Okay, so just be aware. Chart 27, here's a 2-hour view Steve discussed on the weekend. So we didn't get that pullback this morning, but here's some fibs to monitor if we get another pullback. The real bullish case would be this is a wave 1, 2, and then you're going to go up in a 3 here. But for that to be, we need to get going. Chart 28, here's another 2-hour chart just showing this ending diagonal wedge that could be forming. So again, even if we rally up here to make a new high, let's say during Christmas, this is still a wedge-like pattern, ending diagonal type pattern. Chart 29, here's another version of that chart, same thing. And chart 30, here's another version, a 30-minute chart. So Steve showed this on the weekend, this A, B, C, D, and notice how we stopped right at that wave D today. So one version could be we're getting a wave E here, we pulling back here, which we did late this afternoon. If you form a higher low, that would be a wave E, then you rally up, or if we break that, you go down in this Y pattern to this larger demand zone. And chart 31, here's a 15-minute chart, shows this potential pattern. Again, this would be the bullish labeling where we stalled at the top of this coil. We pull back in a wave E. Wave E under a bullish scenario should form a higher low, not come all the way down to the bottom of the coil. And notice there's a big open gap down here that could be a magnet. So there you go, guys. Futures tonight are pretty flat at the moment. Next, chart 32, here's the triple Qs. High performance system. By the way, notice the magenta. We got a new smart trailing stop. Moves up from 509 to 520.56. Nice jump there. 11 point jump in the stop. Very nicely profitable from that re-entry in September. Okay. System's doing a beautiful job. Next. Chart 33. Here's the 4 time frames. Again, just up and away. ATR supporting all these time frames. Little bit extended here today. If you look at the 78 minutes, see how wide the moving average ribbon may need to be worked off a bit. Next, chart 34, here's the weekly view. Again, nice start for the week, up 1.4%. Otherwise, just showing the weekly chart, we're likely working on some sort of fifth wave overall. We've been in a fifth wave, which started basically after the August pullback. Chart 35, here's the daily Qs. Got a little demand zone, but it's basically powering right up here. Basically, price is melting up here. We could end up with some sort of blow-off move, perhaps. Again, this is where the area has been concentrated the last couple weeks, is these big cap techs. Here's the 2-hour view. So you could see the potential little 1, 2, 3, 4, 5. We're working on a little wave 5 here. Now, wave 5 can subdivide, but we are in some sort of wave 5, it appears. Chart 37. 60-minute chart just shows you the same thing essentially. I need to shift that wave 5 over to here. No MACD divergence here. And chart 38, here's a 15-minute chart. Just looking at that, you can see there's an open gap down there to monitor. A little bit of divergence here on the RSI, but we'll see where things go tomorrow. And finally, chart 39, here's IWM small caps. They've been pulling back the last few weeks. Little bounce back today. We'll see if they start to bounce, before Christmas for the end of the year. And here's the 2-hour time frame. Notice the uptrend line here and the larger demand zone. So do we get down to this demand zone near the trend line before this finally bounces? We'll see. All right, guys, that does it for the major indexes. Let's go and move on. Here's the VIX. So the VIX, one thing to note, the VIX was up today 6.4%, while the S&P was up 0.4%. So usually when the VIX and the S&P both move in the same direction, sometimes you have the reverse, the next day, like the S&P being down the next day. So we'll see. So you could see how the correlation indicator dipped today. That's because, again, both the VIX and the S&P were up, which doesn't happen that often. Next, chart 42, here's the 60-minute view of the VIX. Remember, the VIX really likes to fill these gaps. So we filled that little gap to the upside. We still have the unfilled gap down here. Okay. VIX has been moving up here nicely, especially after it formed this little wedge pattern. But, in some sort of Christmas rally, do we maybe fill this lower gap? Now, in the future, let's say when that big fifth wave completes, maybe next year sometime, we have that larger pullback in the market, then I think this gap back here will be filled at minimum. Chart 43, here's the Nifty 500, that's the Indian Stock Exchange versus the S&P. Again, remember I talked about this last week. You have this big old divergence setting up between the two. And sometimes, like I said, you could see in late 2021, you had the same thing. That led to a big correction. So something to watch over time. I already discussed the NIMO and the breadth indicators with you guys. Moving to the bond market, chart 44, here's the 10-year Treasury yield, essentially flat today. But remember, nice rally off that demand zone, which we drew ahead of time. Chart 45, here's that 2-hour view of the 10-year. Remember, over a week ago, I pointed out this very obvious 5-wave pattern. Whenever you see 5 waves, guys, look for some sort of reversal. You had MACD divergence there too. And that's led to a nice rally. Hasn't affected the market really, though, obviously. Next, chart 46, here's TLT 20-year bonds. Remember, they move opposite to the yields. You could see how this topped out right around that 50% fib. And chart 47, here's high-yield corporate bonds. They've been leaking oil a little bit. We always keep an eye on high-yield corporate bonds because the S&P and this tend to be highly correlated to one another. I have a chart where I have both of them on there. I'm not showing that tonight, but a little pullback here, a little weakness lately, a little weaker than the S&P, so something to be aware of. I mean, now if it were to start to lose, say, the 50-day moving average, that could be a problem, but for now it's still holding in there. Now let's look at some of these market sectors. Chart 48, here's XLK technology. It's still in this rising wedge pattern, still within the context of the wedge. Chart 49, here's semiconductors. Remember, they held this demand zone over the last several weeks, finally taking out this trend line today. That's a positive. Chart 50, here's another version of the SOX. Nice coiling action, breaking out of the coil today. So that could have been a trigger for a long, say, on SMH or SOXL, those ETFs. Chart 51, here's the banks. They've been pulling back the last couple weeks. They had a heck of a rally from this bullish ascending triangle and that MACD divergence, nice pullback from there. We'll see now if they can find some support. You got the 50-day moving average down there. Chart 52, financials, also a nice pullback. But you can see the banks and financials have pulled back nicely. Some other sectors, look at the transports. Look at this sell-off the last 3 weeks. Pretty big sell-off here, losing that trend line support, losing the 50-day moving average. Chart 54, materials. Remember I showed this chart over a week ago, lost that trend line, lost the 200-day moving average, and has been just down, down, down. How many days is this down? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down consecutively, guys. Chart 55, here's XLI Industrials, also lost that 50-day moving average and channel last week. So you see my point, guys? There's a lot of weakness here under the surface. The strength is really very concentrated in those techs. Oh, and here's XLE Energy. So logical that it topped out up here in November. But man, after filling that gap, it didn't even hold that 200-day moving average. And today it lost the 61 fib. Looks very ugly. So this sector's been selling off. Now, moving on to the next part, commodities. Here's DBC, the index. Down about 0.5%. It broke this trend line last week. We'll see if that broken trend line now acts as support. Chart 58, here's the weekly chart again. It's been in this literally 2-year range. Next, chart 59. Here's one chart I'm interested to see what it does here next year. The CRB to SPY ratio. Commodities have underperformed the S&P since 2022, but they have a pretty obvious wedge here. So if this wedge were to break out, that would only occur with a pretty good pullback in the S&P or a big rally in the commodities. So this is definitely something to keep monitoring. Next, chart 60, here's crude oil. A little pullback today. Overall, it's been downtrending here for quite a while. Next, chart 61, UNG natural gas. Last week, it stalled at this 200-day moving average. But look at this, guys. Look how many times it's stalled. Every rally has been stalling around that 200-day moving average. So it's clearly a very important point for natural gas. Next, chart 62, copper. Pulling back a little bit. Here's a potential little bear flag look. See how the last rally stalled at those moving averages. A 50-day, 200-day moving average. Also the moving average ribbon pinching on the underside. If the overall world economies are weakening, this could be reflected with copper. They call it Dr. Copper. Chart 63, DBA, agriculture. Man, this thing has really rallied from that ABC pullback I pointed out back in October. Doesn't help grocery store prices, does it? Let's move to crypto. Here's Bitcoin. Again, hit 107,800 today at the highs. You know, had this demand zone which it's been finding support at. Now again, we do have a pretty good MACD divergence here. That could be healed if the MACD goes high enough, but you just got to keep an eye on this. Otherwise, this thing's been going on pure momentum. Chart 65, here's the weekly view. Again, we're working on this wave 5 or wave 3 alt. Chart 66, one of the Bitcoin ETFs, IBIT. Again, same analysis applies. And chart 67, Ethereum. This has been also doing well, as you'd expect. Moving on, chart 68, US dollar. Little bounce back the last week or so. But, you know, hell of a rally from that wedge pattern back in September. But it's consolidating right now. And here's the weekly view. That last pullback did find support in that little broken trend line. And of course, big rally off that big support from September. Moving on, chart 70, gold. So gold is at a nice pullback here the last few trading days. I'm still favoring that as a lower high wave B. And then I would love to see a sell-off again as a wave C. Maybe nears the 200-day moving average. Now, this could be a simple zigzag or it could form some sort of coil. But we'll see where it does. If that occurs, it gets down to here, I'd probably be a big buyer of gold again. Okay. Chart 71, here's that daily chart showing the wave counts. Again, we were counting that last high at 2,800 as a wave 3 of 5. We think it's in a big wave 4 correction, which once complete, we're looking for new all-time highs in that wave 5. That wave 5, guys, should go well over $3,000 an ounce, which is just crazy to think about. Chart 72, here's the weekly view. Still in the context of this big tight channel. You can see I have that pullback labeled as a wave 4. Chart 73, here's silver. It's been weak. Kind of has a little head and shoulder look here, doesn't it, on the daily? You can see the last rally stalled around the 61.8 fib. Oh, we'll see. Bull's got some work to do. That said, even if the head and shoulder plays out, I still think silver will rally to the new all-time highs in the next big rally. All right. Moving to the stocks, here's GDX, the miners. So GDX, remember, broke down from support channel back in October, bounced initially off the 200-day moving average, 50% fib. You had a simple ABC three-wave pullback. It stalled at the 50-day and sold right back down again. So this likely has a lot more correction to do. Chart 76, here's the 2-hour view. You can see it may have completed that ABC that I was looking for. Stocks have been vastly underperforming here. And the final one here is BPGDM. This is our GDX trading system. It's a Renko chart, very clean. This gave a very obvious sell signal back in October in the overbought territory. And you can see when GDX had that last reflexive bounce, it never even flinched. It didn't even give a buy signal. So I'm wondering if we need to see this now work off back to these more oversold areas. All right, guys, let's move to the final part of the newsletter, the trade ideas. So here's Sophie. We had it as a long idea late last week. Nice pop, new all-time highs. That said, we are setting up some divergence now, so make sure to have stops in place, take some profits. Chart 79, Rocket Lab. Well, I talked about this three-wave ABC pullback. Talked about that wave C last week. It's now trying to rally up again. Jarbor 80, here's IMMR, long idea last week. Well, if you bought it last week, you could see it had a little Pinocchio move on Friday above that resistance. You may have bought it there. Nice pop today off the highs, but look at that volume coming into it. Jarbor 81, Lucid or XMTR, little ascending triangle pattern from a couple weeks ago, continues to play out. I just trail the stops up below the 9 EMA at this point. Take some profits though. Jarbor 82, Lucid, nice move out of this pattern, broke out of that little pattern, back tested it. That was a second long opportunity there, and it's continued to rally since. Congrats on that. Next, Jarbor 83, here's TCPC. This is that dividend play. Now, nice pullback today, but today was the last day to own it before the dividend. The ex-dividend date is tomorrow. This thing pays about a 16.8% annual dividend. But again, this is something you buy today. I pointed it out when it was down here in the big support range. So this was something, to buy back in October. Hopefully some of you guys bought it down here. You've had a nice gain in price. And then now you should get the 44-cent dividend. Jarbor 84, AFRM, this weekly chart. This chart continues to look nice. I do think over time it works up to this supply zone up here. Jarbor 85, Toast. This was a little short idea. It popped below the support today, but then came right back up. That said, it's still vulnerable here. So if you did short this, I'd put a stop maybe above that little lower high there. Jarbor 86, CELH. There's a little bottoming pattern. Never triggered. Still monitoring this one. Needs to clear that 3240 area. Jarbor 87, here's a new one, Cipher. By the way, this is a crypto mining stock. It's got a big cup and handle look. Look at the volume today. And Jarbor 88, the last chart, BGFV. Nice little bottoming pattern here. Notice the pickup in volume today. Volume was about 2 to 3 times above average. So resistance is the upper trend line here. We'll see what happens tomorrow. All right, guys. Again, happy holidays. Appreciate all the support. Take care. Have a good evening.